News Channel 7 at 4 continues with a segment I'm going to call Retirees. This is everything you wanted to know about taxes, but were afraid to ask. Joining us now to answer all those questions is private wealth advisor Logan Woller from Buska Retirement Solutions. Welcome, Logan.
Thank you for having me.
Surprises are great around birthday times, but in taxes, not so much. What should retirees do to avoid some tax surprises this year?
Yeah, it's a simple answer here, which I hate having to keep it the simple answer, but it's having proper planning and do a little bit of your own research. Because our whole life we're in that accumulation phase, so we still can do some tax strategies in the new year for 2025 in this case. Still,
even though it's past 2025.
Yep, but once you get into retirement, that kind of goes away a little bit because we can't put money into traditional IRAs or Roth IRAs because we don't have earned income anymore. So with that proper planning and doing your research, because one misconception right now is with that one big beautiful bill that came out on July 4th last year is no tax on Social Security income. That's actually false. There is still taxable income on Social Security. It just depends on a few factors.
Gotcha. But it's not too late to do some planning for 2025.
Correct.
This year. Okay. When your income is Social Security, pensions, and retirement account withdrawals, I would imagine taxes are a little bit different than what you'd expect.
Yes. So that's where it comes back to the research and the planning. So sitting down with a good financial services professional like myself or anyone else around town can really help look at your different income streams because they all have a little bit different tax situations. So Social Security can be 0% taxable income all the way up to they can consider 85% of that benefit taxable income. Just depends on your other income streams that are coming out, whether it's a traditional IRA or any really pre-tax account.
Is that something that's changed with the Big Beautiful Bill, or has that stayed the same pretty much?
That stayed the same. What had happened with the One Big Beautiful Bill is that when they were promoting it and advertising it, they were saying no taxes on Social Security, but at the last minute, like most bills, they changed some things. So instead of getting rid of that tax on Social Security, for anyone that's 65 or older, they're just giving you additional write-off of $6,000.
Ah, gotcha. Okay. So what's a common mistake you see when the retirees get to taxes, and what can they do to avoid those mistakes?
Yeah, it's just looking at the new numbers. So what I mean by that is when you are looking at your federal taxes specifically, there's different brackets. There's 10, 12, 22, and so on. And there's different income amounts that put you in each of those brackets. And it's a tiered schedule. So the first amount of dollars are taxed at 10%. Then if you go over that dollar amount, then whatever is over that is taxed at 12, and so on and so forth. So those new numbers usually come out in November for the upcoming year. So really looking at those numbers and seeing what your income streams are to see what your taxes are going to be. Because if we just jump a little bit into that 22 or that 12 or that next bracket, just that portion's taxed at that amount, but still, that can really impact your income streams.
You're making my head spin. This is the reason you hire a professional to do this stuff.
Very true.
Okay, one last question. We have a couple seconds left.
Yes.
Smart tax planning, I would imagine, helps those retirement savings last a little longer.
Yes, of course. So it just goes back to what I've already been talking about, but looking at your different income streams, because things like pensions are always going to be taxable in retirement. But if you have something like a Roth account, or what they call, this is really going to make your head spin, a non-qualified account, which is basically, think of your bank accounts. You've already been taxed on that money as it went into your bank, but then any of the earnings you get throughout that year with the low interest rates banks have, but the IRS does count that as taxable income. So just making sure you know your different tax buckets can really help out.
Once again, go see a pro so they can help you pay as little taxes as possible.
Yes.
Logan, thank you so much. We'll see you again next month.
Thank you for having me.